Hello, everyone, and welcome to another episode of Banking Experiences, a Hyosung Innovue podcast. I'm your host, Daniel Litwin, the voice of B2B. And folks, welcome back to another in-studio conversation here with the Hyosung Innovue team as we continue to explore major trends, technologies, and evolutions that are shaping the world of banking today. Make sure that you're heading to our website, hyosunginnovue.com. Again, that's hyosunginnovue.com. For more information on the technologies and solutions that we're going to be breaking down today in our conversation, but also just for previous episodes of our podcast, you'll find plenty of conversations on the retail sector, the self-checkout sector, and of course the banking sector, all on our website. You can also subscribe to our podcasts on Apple Podcasts and Spotify. So just hit that subscribe button. You'll find a full catalog of previous episodes, as well as notifications when we drop new conversations. All right, team, let's jump in. We've got quite a lot to cover today, and we're going to be diving deep with today's episode into the dynamic evolutions of bank branch operating models. So over the past decade or so, the banking landscape has witnessed a seismic shift with major innovations that have been reshaping the very essence of how banks operate and also how they serve their customers, with putting that customer experience front and center and letting that guide evolutions for bank branches and their operating models. So from the traditional long counters, teller lines, and vast vaults to the modern day compact and automated branches that define banking, the transformation has been nothing short of revolutionary. But we wanted to use today's conversation, since we've touched on some of these topics before, to kind of pulse check late 2023, where are things at with this transformation, right? Where is this revolution of bank branch operating models introducing opportunities for better relationships between said bank branches and their customers? Where is it introducing some operational challenges for banks that they're having to adjust to? What technologies are going to be key to support the modern bank branch? And how are some larger industry trends, demographic trends, and technology trends shaping the future of those operating models? Well, we're going to break it all down here today with another episode of the podcast. Now joining us to shed light on this evolution and help contextualize the larger scope of these trends is a frequent guest of ours here on the Hyosung Innovue podcast series, my good friend, Mr. Bill Buddy, Vice President of Banking Strategy and Solutions here at Hyosung Innovue. Bill, it's been a hot minute, but welcome back in studio, and I'm grateful to have you here on the podcast with us.
Always great to be here. It's always fun to have these conversations.
Yeah.
I really appreciate the big introduction too. It's always nice to feel welcome. Right?
Absolutely, man.
Good times.
That's what I'm here to do. I'm here to make sure Bill Buddy is well platformed, So thank you again for your time, and I'm looking forward to picking your brain on these trends.
Sure.
And again, getting that pulse check for our audience on where these evolutions, which aren't necessarily anything that new, we have seen them materialize slowly, but really get a pulse check on where they're at late 2023 and get a sense for what is new about certain dynamics within bank operations, but also how some of these trends that maybe were nascent a few years ago are starting to become more standardized today, which I think really speaks to the larger evolutions we're seeing in bank branch operations. So let's start here. A lot of the bank evolution over the years, though we can pinpoint some of these trends across the industry, they haven't necessarily been implemented in sort of like wide sweeping waves with regulation saying, okay, now every bank has to have a micro branch or something, right? Or every bank has to have a cash recycler or anything like that. It's really been more of an individual pace per branch, per company, with tech that augments and streamlines existing offerings. I'm curious how that sort of individualized approach has shaped the last several years of bank branch operating model changes. What have you seen, right? How does that dynamic influence where we're at today?
Well, it's an interesting bifurcation, actually, of some of the things that do tend to change in the banking space. Because you do have a whole list of regulatory things that everybody has to adhere to.
Right.
And making any kind of change costs money, takes an investment of both time and human capital, as well as investing real dollars to make those changes happen. And when they're regulatory, of course, everyone has to do it, and it's by a timeline or what have you. Every bank has its own budget, right? So what's left over after they do the things that they have to do is what they can spend on investing to, a lot of cases, make their operations different, better, more efficient, more effective, what have you. And of course, you can't do everything because you have a limited budget.
Sure.
So you tend to get you get a lot of banks that every bank shows their North Star with those decisions. They're kind of showing how they prioritize different angles of things. Do they prioritize a different customer or member experience, or do they prioritize being as efficient as possible? Do they prioritize educating customers more directly? What are the things that they prioritize, which raise to the top of their kind of investment list? So you get a sampling of banks who some will introduce a type of technology that is specifically about making the cash flow in their branch be as efficient as possible. Yeah. And others, you get investing in technology that allows their employees to not have to do rote tasks all the time and frees their time up for having rich conversations with their customers. So there's a lot of different categories of that investment, which does, to your point, then get kind of a little bit of a very kind of wide range of different types of implementations.
Right.
You get
and
a lot
different
of banks,
paces too.
and at different, yes, very good. Also, the scale of your investment determines the pace, right? So you get banks that go all in on a bunch of different efficiency technologies, and now they've kind of, in the blink of an eye, almost 3 or 4 years, they've totally changed the way they build branches. And you have other banks that it's a little bit more of a crawl pace, where little small iterations at a time, because that's the way, again, a little bit of their corporate culture. Switching on a dime is not what all banks do. So it's a little bit more of a softer curve, right? So those changes kind of happen a little bit longer over time. So the kind of then consequence is you don't have universal adoption of any one of these technologies yet. So you still have a lot of, when a bank decides to make that investment, there's a lot of learning curve that goes on with that, because there is no universal playbook for a lot of these things yet, because they are still, I did part of this, or I did this 90% of the way, or I've done these 3 things but not these 4 things.
Right.
And somebody else did, well, these 2 things plus this 1 thing but not the other 4 things too. So it becomes a little bit of a very unique implementation every time. As more and more of those technologies are adopted, it starts to become a little bit more homogeneous again, and a little bit more straightforward and standard to adopt for the later adopters. Yeah. But it's still a long way from that, because you still have a lot of different ways to skin that cat, for lack of a better analogy, right?
No, yeah, very true. And I think what has been a unifying factor is an acknowledgement that these technologies and these investments are all serving the customer experience and are innovating upon it, and almost letting the customer further define and iterate upon their own experience, right? As the technology kind of puts a little more power back in the customer to define the experience they want to have, it sort of changes the dynamic in the relationship between the branch and the customer in what I would consider a positive direction. But let's get a little more specific on some of those changes, right? Can you walk us through the journey of bank branches over the last several years? What have been some of those key changes? Sure. And how have you seen them further evolve from their more traditional setup to the modern bank and bank branches and operations that we see today?
Yeah, so I mean, when you talk about that kind of, I guess what is termed as that traditional setup, right? It's the easy analogy there is that it's kind of like the grocery store, where the milk's in the back, and you got to walk past everything else to go get the milk, because that's what you came to the grocery store for.
Maybe I'll grab that Rice Krispie treat on the way.
Yeah, exactly. You see everything as you're going. The milk in the bank branch case was the big teller line in the back of the branch. Yeah. 99 times out of 100, a lot of times, customers would walk into the bank because they had transactions they needed to do.
Right.
And walking past all those banker offices, banker cubes, to provide a chance for richer banking interactions that they might not have thought they wanted at the time, but it's the upsell style of opportunity to get all the way back to that teller line was a key feature of the way you designed branches. And branches were designed that way for decades, right? That was just kind of the standard. That was kind of the template. And then you had the big operation space in the back of that where you had tons of tables and open space where people would spend hours before and after the branch was open, counting all the cash to make sure that they were in balance every single day. Yeah. And then as you mentioned earlier, you have the big vault where, like you see in the, heist movies with the big, wheel and the bars that go out to lock into the wall and everything to store all the money at the end of the day. And as more and more technology has come into play in a couple of different categories, probably the biggest one is cash automation. As more technology has come into play from an automation perspective to simple things like the countertop cash counters, to more technically difficult things like a TCR or even into your ATMs that have existed for a while, but were pretty simple for a long time until the last couple of years. Now the ATMs can count and recycle and store and sort cash themselves in an automated fashion, right. In a totally self-service automated fashion as well. Now you've got kind of a wide range of technology that makes all of those processes that existed forever and ever and ever because people had to count that cash manually because there's no other way to do it, now can become quicker. Even the simple countertop cash counter takes away a lot of the big space that you used to have to kind of sort and store all that money because it right. counts it by denomination. But then when you add to it the TCR style capabilities where it doesn't just count it really quickly, but it also puts it neatly in a specific container that can also be automatically retracted from in the future, into self-service devices as well that manage their own internal cash. Now you get a lot less of a need for having a big, long teller line. And then on top of that, you have a lot less need for all that space to count and operate with all that cash because it stays more compact. It stays, under automatic control a lot more often, a lot longer. So you have a lot less moving it around. That specific category alone gives you the ability to kind of cut some space out of the branch that you don't need anymore. Make it a little smaller, make it a little compact.
Right.
Which becomes very valuable when banks want to advance into new cities that they don't operate in, right? You want to go into a downtown of a large city. You used to have to build a 4,000 square foot branch. There's not a lot of open places in large cities where you can just plop down a 4,000 square foot building.
True.
But now if you can open buildings that are smaller that still service your customers in the same way, you have a lot more choice of where to put some of your branches in a dense downtown area. And then you add some other you kind of get the video banking technologies and online banking technologies too. And now you even transform the main activities that happen in a branch. It's no longer that 99 out of 100 customers that walk into a branch just came in to do a transaction. They're doing a transaction online on the couch on their PC or on their phone when they're on the move or even at an ATM. They're walking into a branch because they still value the relationship with the bank that is storing their money, but also a partner in their financial future. And they are coming in because they need to they have life events that they need to make modifications for. My daughter just turned 16. We're talking about getting a new car, so we might need another car loan.
Nice.
Or getting ready to go to college and making sure your 529 plan is correct and time appropriate based on the age of your child, sure. Or talking about your IRA because you have your time horizon for when you're going to retire. All that kind of stuff. Everyone can't be an expert in all that stuff. That's really kind of the core service that banks really offer from a safety and security of your financial future perspective. And that's what really kind of drives then people coming in and really wanting that relationship, wanting that advice. The technology put around it allows the employees in the branch to be free to have those rich conversations without having to worry about spending all their time counting the cash and moving all the money around and stuff. They're really kind of focused on that relationship with the customer. So it kind of changes the dynamic of what happens from a customer perspective in the branch too.
Yeah.
And to your point, it gives the customer the ability to chart their journey.
Right. And we see this manifest in some very specific ways, which we're going to break down here on the podcast in a little bit. But this includes things like cashless branches that we're starting to see pop up now. Micro branches, like you mentioned, right, in urban settings where the traditional giant brick and mortar footprint is just not viable or doesn't make economic sense anymore. But before we expand on those trends, I want to get your thoughts on sort of the chicken and the egg scenario here, which is the technology that is making these new operating models possible, is it motivating the shift, right? Is the impetus the tech itself, or are these operating models something that banks were already eyeing, they were moving in this direction, and rather the technology is just helping further realize the trend rather than motivate it in the first place? What are your thoughts?
Well, that's an interesting question, because there is a little bit of kind of the chicken and the egg in both, right? I think there's a big part of the answer to that question is really kind of understanding the art of the possible.
Yeah.
Before some of that technology existed and was relatively stable and easy to implement, I'm not sure that you would have had a lot of people in the banking industry who could have articulated, hey, we want to have micro branches that automate everything, because it really wasn't thought of as kind of that in the realm of possibility at that point, because that's not the way things were done.
Right.
There was motivation to, be able to do things like get into smaller locations, to be able to more easily enter a market. But I'm not sure that there was the kind of thought around it of this is how we would do it.
Right.
And then this technology starts to come along where, instead of having this kind of 30, 40, 50 different kinds of transactions that all had to be done by a teller sitting on a counter with a teller platform that was very kind of full functioned and could handle every single type of trading money back and forth. All of that stuff being able to then migrate onto a self-service style device that can do 99% of that stuff, pay your bills, withdraw money from your home equity line, make a payment on your car loan, deposit a check where part of it goes to making a payment and part of it goes to your checking account. Some relatively complex transactions that up until a few years ago really weren't thought of as something that you could ever automate. Now, when all that stuff is automatable, now you can start to envision building a location that is a full service location for your banking customers.
Right.
Where if they want to do a transaction, well, the self-service device helps them do that transaction.
Yeah.
And if you want to have the banking conversation, well, that's what the bankers are there for. But when you talk about the concept of micro branches, for instance, you could have 2 little offices and 2 ATMs, and that's your entire branch.
Right.
If you really want to push it to the extreme, which some banks have started to do that, especially in their in-store partnerships where they have that tiny little branch inside a grocery store.
Right.
It's tiny. It fits in the palm of your hand almost, and it's a couple of banking offices and a couple of ATMs. The automation piece where you can automate, you can create locations where, the standard choice is automation for every one of the transactions that a customer is going to come in for. Now you don't need any of that space that would have traditionally gone to a full teller line with the operational part in the back. And then you could have something as little as 2 offices and a couple of ATMs. You can then kind of use it as almost the kind of Lego building block style of how do we want to create those experiences? Do we want to have a location that's a little bigger that now has a teller line and a couple of ATMs or self-service kiosks or whatever you want to call them? ITMs, I think, is a term that sometimes gets used where they're more full function. Do you want to have a customer choice of how they experience those transactions? Do you want to have 4 or 5 different bankers because you need to have a mortgage banker on staff all the time in this location because of where it is? You have a lot of different optionality, but you can build it in a lot of different ways because there's a whole lot more choice in the types of technology you can put in there that really didn't exist 10 to 15 years ago.
Right. And now, that can manifest in ways where the human element is obviously still there, but is, completely removed from the physical footprint. When we see things like video tellers in the most advanced versions of ATMs today, pretty powerful seeing these evolutions take hold and introduce new operating models. But you brought up a good point here, which is that automation is really key, right? Automation is the big operational layer that is bringing the most possibilities to brick and mortar banking, but also introducing maybe some operational challenges or at least just nuances that are unique to the space and that banking professionals are having to adjust to, and companies as well at large. I'm curious where you see automation shining the most for bank operations. Where is it really, in its prime and doing the most for the future of banking? But also, how are you seeing it disrupt some of these traditional operations for banks in ways that are challenging, not necessarily negative, but just it is new and it's a bit of a challenge to adapt. So the good and the bad.
So I think I think on the good side, I guess, of that equation, you kind of see that technology that basically does kind of what I was just describing with the teller line piece, where it's anything that a customer wants to transact with that bank, they can choose to do it in a self-service fashion if they want to. And it really kind of totally disrupts the way that a bank not just builds its location, but also creates its process list. Because at every company, you have your book of processes that, have to, if you have any size at all, you have to have kind of standard processes so that customers get the same experience wherever they go. And especially in an industry like banking, where you have to make sure you're keeping track of your customers' money, there's a lot of importance placed to processes happening the way they're supposed to happen every time they're executed. So when all that changes, when customers do things differently now, when capabilities are added that allow customers to do things differently, well, the whole list of processes has to change too. And then the way you audit those processes has to change. And it really disrupts it. For the better, in that a lot of those processes now become simpler. So they're simpler to audit, they're simpler to keep track of, they're simpler to make sure they're happening. It's just you have to go through that change. I do think on the negative side, though, the challenge that comes in is that when you also kind of add to the mix, online banking and mobile banking, which are a lot of those same capabilities as well, you do get a lot of customers who don't make their way into a brick and mortar location anymore. And you really have, the challenge comes in making sure that your customers are educated about the value that they can get by showing up at your door.
Right.
Because there has to be some value there, or they're not going to be your customer anymore. And it was kind of those examples I was talking about before, where it's like, you're not just the bank that holds their money, you are a partner in their financial future. And when customers see value in that, they're going to walk through your door a lot, because they're going to want to make sure that their financial future is secure, and you're a partner there to make that happen.
For sure.
And it's a challenge because it's, that's a hard concept to be able to educate a lot of people about. Any bank has a lot of customers. Trying to educate all your customers about how valuable that is can be difficult.
Right.
And it can be very challenging to successfully do well.
Now, I want to expand then on the technology that's powering some of these operational shifts. We've already spoken on them, but I just want to give each of them a chance to shine a little bit here. So let's talk ATMs.
Yep.
These have been around for 50 years. ATMs aren't new, but the technology facilitating automated banking experiences is kind of helping, fully realize and almost recontextualize the A in ATM, right? The automated aspect of an ATM is really stepping into its own now, and you could even say, again, being fully realized. So how have you seen the role of the ATM in the physical banking branch and operational model? How have you seen that role and functionality change in recent years? And what are the technologies that are making those changes possible or motivating the changes in the first place?
So I think on the ATM side, I think it's really two kind of key pieces. Because ATMs, they've been around since the 60s. And for the longest time, they were created as relatively single function devices. Even though it was an automated teller machine, it really just basically sped out $20 bills or $10 bills or whatever you put in it.
It just automated the physical act of, here's your money.
It was a $20 bill vending machine, basically.
Yeah.
And if you want to do anything more complex than withdraw $100 from your account, you had to go through a whole different set of processes. You had to show up between 9 a.m. and 5 p.m. You had to, talk to somebody. And so a lot of those transactions were still happening inside the branch as well. But they were useful. It was useful to be able to stop at an ATM at 10 o'clock at night if you needed $100 before you were going to go out to dinner or whatever.
Right.
as more functionality got embedded into them, so it's a little bit of a cyclical thing, these two things. As more functionality got embedded into those things, people use them more often. We talked about this the last time I was here about the way people pay. Cash is still a very large part of our economy. So as more and more people started using ATMs, the amount of cash flowing through them increased quite a bit. So just lately, in the past few years, the ability for those ATMs to take in cash from customers and not just put it in a bin and wait for somebody to empty it because it'll fill up pretty quickly, right, but instead sort it and store it into different cassettes by denomination, then reuse that cash for the next customer who wanted to withdraw,
right,
is a huge change because it means those machines need a lot less care and feeding to continue to stay up for customers.
Okay.
And then the other side of that equation is the evolution from what was for probably 40 or so years a single function device to something that can do pretty much anything you as a customer need to do by exchanging cash with your bank.
Right.
Paying your mortgage, all those examples, paying your auto bill, being able to take an advance out of your HELOC, being able to withdraw money from one account and then deposit it into a different account, being able to even do non-cash transactions while you're in the middle of that stuff, or
right,
checks, which are still a pretty big part of our economy as well. And being able to do that really changed the device from a single function utility to something that now can have this level of functionality that's on par with the teller line.
Right.
That big teller platform that every single teller station had to have a PC on it that could operate this complex teller platform to do all these different transactions. Being able to do that in self-service, because instead of that ATM being that single purpose device, but it's connected directly into your banking core just like the teller platform is,
right,
now makes it such a much more multifunctional device that it makes it you're able to use it for a whole lot more than just that single function that it started with. So I think those two things are the things that really kind of have transformed that device in people's eyes.
Now let's talk about the cash recycling layer here, right? TCRs, teller cash recyclers, are a key part of the automated future of banking. They're both sort of a hardware layer that's being integrated into other self-service kiosks, the ATMs and co of the banking world, but also taking on their own sort of focused form as well. I'm curious how TCRs have helped transform the banking experience in your perspective, how they play a supplemental or a kind of a driving role in those changes in terms of efficiency and space utilization, and how do you see them further automating banking operations?
Well, yeah, and that's a great compliment to ATM. The TCR put inside a branch really lightens the cash operational load for the portion of stuff that's not self-service, right, that happens in your branch. Because again, banks generally like to have choice for customers. So a customer can walk in and use a self-service device or walk in and talk to a teller to do a transaction.
Right.
And giving that teller the tools like a TCR that lightens their load on a day-to-day basis, meaning that for every transaction that now you walk up to a teller where if they don't have that tool, they've got to pull money out of a drawer and count it and then hand it over to you, and at the end of the day count down what's left in their drawer and balance it against what should be based on the transaction record of the day.
Right.
Taking that operational load off of the employee and putting it onto a machine does a couple of things, right? It creates an environment where you don't have to, again, do all that countdown at the end of the day, and it becomes a lot easier to operate, a lot easier to close things at the end of the day. But it also removes a lot of stress from employees that do that job, because being a teller is a really stressful job. Like, you have to count things fast and accurately all day, every day. And if you're off by $20 at the end of the day, and that happens a couple times, you can get fired for that. And that's a hard job to be in on a day in, day out basis. And when you can take that stress off of it, and now the job becomes much more about, what can I help you with? Yeah. How can I help your day get better? What can I make happen for you? Even if it's just, you need to withdraw $100, but I don't have to worry about whether my drawer is going to balance at the end of the day, because the machine counted this $100 just like it counted the last $100 from the last customer, just like it counted the deposit that small business brought in to make sure it was accurate.
Right.
I'm not stressed about, did I count it right? Oh, did I miss a $20 bill in that deposit? I'm only worried about what your needs are as a customer. Yeah. And it transforms that job. It makes that job a lot more about service than it is about counting speed and accuracy. So in addition to taking away a lot of tasks from an operational perspective, it also kind of changes the way your employees can even interact with your customers, because it gives a lot of time back to the personal part of that interaction and not having to show the customer the top of your head while you're sitting there counting money in their transaction.
Right. So let's intersect these technologies now with some of their resulting trends and further expand on the trends that are, I guess, fully realizing this idea of a smaller, more automated, and more digital payment-centric brick and mortar bank branch, right? Which is sort of this like confluence of the omni-channel nature of where banking is headed, still all manifesting around the brick and mortar footprint, which I find very interesting. So let's start with cashless. This one's a little more unique, and one that you might say, why would you need a bank branch that's cashless at all? Yeah. Isn't that kind of the point, right? But anyways, the concept of a cashless branch I find intriguing. I'm curious if you can elaborate on this trend and how automated devices like ATMs and TCRs are playing a pivotal role in this transformation. We'll start there.
Yeah, so the topic of cashless branches has kind of started to become pretty hot over the last few years.
Yeah.
And cashless sounds a little bit different than what the actual manifestation of it really is. It's not that there's not a single piece of cash in this location.
Right.
It's that you're not touching, maybe it's more touchless, you're not touching any of the cash. None of the employees are touching the cash because it's all in automated devices that are self-service.
Interesting.
So when you go in and you need something that's cash related, that money's always going to go in and out of a device. Even if you need assistance partway through that transaction, you were talking about video tellers a little bit ago, or even assisted service that's in person, an employee's there to help you. So it's not like a stark wasteland of tumbleweeds going by and no humans there at all.
Right.
You still have that service element that you need to be a bank. And those service elements or those service points, if they're transactional in nature, can come in via video. They can come in via, an assist in the middle of the transaction. They're both working on the same kiosk or whatever. But at the end of the day, cash coming into the branch from a customer deposit or payment, or cash going out of the branch through a withdrawal or a check cash or whatever, comes in and out of an automated device. So you kind of have a wide swath of processes now that you don't slim down, you've completely eliminated. You don't have to take your big cash delivery from the CIT anymore because the money's going straight into the machines. You don't have to reconcile your vault at the end of the day or week or month because there is no vault to have cash in because it's all sitting in these, self-service devices. So you've kind of totally created the way you not just build, but operate that branch. And it becomes enticing because you've eliminated that wide swath of operational tasks and you're focusing on the relationship style tasks. Those are the ones that are bringing value to the bank.
Yeah.
They're bringing value to the customers, but at the end of the day, it's also about bringing value to the bank, the company who is operating for profit, bringing in value as well. And when you can hit both of those, you're bringing value to your customer and you're bringing value to the bank. That's kind of the proverbial win-win, right?
Yeah, totally. Exactly. And, I think it speaks to, again, these technologies and operational models putting the customer experience first. And when that is the motivating factor for implementing new technologies, for rethinking the literal size or operational feel of a brick and mortar location, that's when you're going to see success. Because when the customer's happy, you win, right? That's a dub. So I'm curious if you see this idea of cashless, or maybe more specifically touchless. Do you see that becoming a standard for the industry, or is that going to be kind of like a limited iteration of the bank branch? What do you think?
That's a great question. I think depending on your time horizon would depend on how I
right. Are we talking
question.
2 years or 50 years or whatever? Yeah, right.
Because like there's a couple places where it pops up even now, but it's a little bit experimental still because the technology is still relatively new when you pull it all together.
Right.
And I don't see this being the default standard. All other bank branch operations don't exist anymore other than this one for a long, long time, because there's still a lot of value in the way banks operate with manual processes as well. There's still a lot of time and effort necessary to change all that if they're going to change it all. But I do see it being a valuable tool for banks to use in a couple of different vectors, right? In a footprint expansion type vector, it kind of gives another level of optionality about how to enter a different piece of your footprint.
Yeah.
It also provides a little bit of a right sizing capability in some locations where you might need to add in a little bit of extra capacity in a location because a city might be getting more populous, more dense, and maybe you have 3 branches in a relatively one zip code or 2 zip codes or 1 county or whatever, and it's become a little bit more dense. So now you need a 4th, but you might not need a full size 4th. You need 3.5 maybe, and it gives the bank an optionality to do that, or even to kind of go a little smaller and more streamlined in some cases. So I do think it'll be a valuable tool and a valuable asset, but I don't think it's going to be the predominant one for a while.
Yeah. Well, let's pivot over now to the micro branch.
Yep.
We've talked about this now at length here on the podcast, but beyond kind of what's driving the trend, which I think is rather evident, right? Like a smaller physical footprint always makes good economical sense, especially if you're trying to expand into more areas. Operationally, if the technology works, it's less of an operational load. But regardless, how do you see these micro branches moving forward, fitting into a broader banking ecosystem, especially in some of these more densely populated urban, metropoli across the United States?
So it's a little bit of like the extreme version of kind of the cashless or touchless style location. Like you can have a cashless branch that's still a relatively big location because you want to have a lot of advisors there or whatever.
Right.
That micro branch is kind of the extreme version of that, where you try to give as much capabilities to your customers in the smallest footprint possible so that you can be in multiple locations, and you can go into a lot of different locations. I do think that, especially to your point, in urban locations can be a very valuable way to add density, add access points to your customers without having to restrict yourself to, I got to find a large footprint area before I can even move in there. So I think that as the technology gets more mature and more standardized from an implementation standpoint, that will be something that I think you'll see a lot of in urban settings, because it's going to be something that gives banks a lot of optionality about how they place their network, where they place their network, when they place their network, and even can be stepping stones where, it's a micro now that evolves into a larger one later type of scenario where it could be like the growth. It could be a step in the growth path.
Yeah. And what I like about the micro branch is that micro still means macro in terms of services, right? The smaller it gets, the technology is actually enabling for the smaller footprint to do as much, if not in some cases more, than a traditional branch. So that sort of dichotomy, I think, is interesting to see play out. And I think it's something that's going to make micro branches further standardized in the industry, because I think banks are going to be able to realize we can do way more with way less and still maintain, if not enhance, the customer experience. Like we've been saying, by putting more power back in the customer's hands to define that experience for themselves through tech.
Right.
So,
and really then focusing those human interactions really on the things that make you stand out as a bank, as a partner for your customer.
Right. And where they're really needed too.
And where they're really needed.
Deploy that humanity thoughtfully, not just kind of blasé across the whole process. Yeah,
because and that's a great point too, right? Because when in the days where you were building the cookie cutter 4,000 square foot branches, they all kind of had the same pieces to them too. Right. So it wasn't quite as efficient deployment of those types of capabilities. And with a micro branch, you can have a micro branch that is very focused on small business customers only. in a location that is dense, like right in the middle of a bunch of small businesses. And then you can have another one that really doesn't even deal with small businesses because it's in a more suburban setting where there's just houses as far as the eye can see, and there's not going to be any small business customers that go to that location. And you can place more of them because they're smaller, which means they draw from a little bit smaller area, which means that user base can be a little bit more homogenous and it can be focused to a very specific need for your customer base.
Right. Now, as we start to wrap up the conversation, a major trend here that I think is impacting the dynamics and the technology of the physical brick and mortar, a bank branch, is the evolution of digital banking, online transactions, peer-to-peer transactions. I mean, anything that really puts the power of banking on the phone, is really leading the charge on the customer experience and then how the physical model adapts. So I'm curious, with that solidification of these services to some of the most customer-centric services in banking today, how do you envision physical branches trying to tap into that more and almost becoming an extension of the personalized digital banking experience? Where do you see that dynamic kind of, coming together?
Yeah, so, and that's a really good question, because that really kind of will drive how banks deploy all of the resources in their tool belt as to kind of get that message out to customers, to create that stickiness with their customers so that they value their relationship. You're starting to see now, even in the online space, a lot of banking style online interactions too, not just transactional style where you're opening an account online, or you're opening an IRA online, or you're doing investment, like making major investment decisions in an online manner. One of the things that you still see in that area, though, is that there is a large population of folks who get partway through an online account scenario or an online banking scenario and might have a question or two and just abandon the process because they didn't want to guess on their own. And that's not unique to banking. That happens in a lot of places, but in banking, it's a little more prone to that, just because you're dealing with somebody's dealing with their own money, and it's something that people don't want to make a mistake about and blame themselves for missing out on something or whatever. So I think there's a couple of kind of pieces there, right? There's the one piece which is that the more time and focus that's spent on that user experience online, whether it's making it more intuitive, easier to use so there are less questions, or augmenting it with, again, being able to have someone pulled into the transaction, even if it's via video or via text or what have you, to immediately answer any question and alleviate a problem and get people back on track to finishing a process.
Yeah,
that's going to be an important way to make that also a more common use case, right? But again, every one of those takes away traffic from a brick and mortar location.
Right.
So the other part of that equation then is really understanding the mix of what people can reliably do online and creating the user experience that is so intuitive that people will reliably do it, and having those customers still feel like they have a connection with that institution that they value, so that they remain a sticky customer and they remain, with their IRAs at your institution and with their mortgage at your institution, and because they have a relationship with the institution, not a transactional relationship with, they just filled out a couple forms and now they're going to go fill out a couple forms somewhere else and move to a different location, right? So I think that's a challenge, and it's, again, not unique to banking. All the self-service that has come into our lives with the internet, with video accessibility, with self-service, any types of ordering, online shopping, that kind of stuff, it all brings challenges to brick and mortar locations. And one of those challenges is making sure that your brick and mortar location maintains relevance, but the other challenge is making sure that you've got the right mix. And maybe the right mix isn't as big on brick and mortar as it used to be.
Right.
I think that's going to be a key question to find out. What's the right mix of locations where customers still feel like they can get to you,
right,
but you don't have places that don't get any traffic at all because there's not enough people walking through the doors anymore, because they can do all those things online intuitively, easily, with help.
Yeah. And one of the I guess, paradoxes of self-service is that while it is a benefit to the customer, like you said, it does somewhat abstract and alienate that relationship layer. It can be a lot easier for someone who has all of the power of banking on their phone to say, well, Chase has been great, but I'm going to jump over to Bank of America now.
Yeah.
And do that because the service is more or less the same across all functions, right? So as bank branches take on these automated services, embrace digital banking, and have their physical branches become extensions of that ease of access to banking services, it's going to be even more key for those physical branches to help communicate the brand, to have a layer of unique services, aesthetics, integrations with other aspects of, like you said, life services like your investment accounts, your loans, life goals like saving up for college or retirement. All of that now actually becomes even more important to emphasize and to build relationships through, rather than relying on the basic foundations of banking services to be kind of what attracts the customer and what locks them in. Yeah. If anything, it actually makes it a little more personalized and enhances the possibilities for that relationship. It's just going to take some strategy to fully realize, I think. So.
Yeah, I think so. When I worked in banking, not on the manufacturing side, but actually at a bank.
On the bank side.
Yeah, on the bank side, one of the things that we used to always kind of think about was, if you're a large national bank, a new customer may walk into your door because of the logo, but they decide to bank with you because of that branch manager, because they have a relationship with that person. And that's just like teller's a hard job and an important job. A branch manager is a hard job and it's an important job. And it's the one that those customers at the end of the day are actually, handing over their money to.
Right.
Creating the relationship with. And that is still an important aspect, as you were talking about. Create that relationship, make customers understand what's unique about it. Even though it's maybe a national brand, or it may be a regional brand, or it may be a community brand, you're still doing a personal interaction and very personal business transaction or a business interaction with those people. And that's important to make sure it stays part of that process.
I agree. I don't think we could end it on a better note. So I think with that, we'll go ahead and wrap up the conversation. I'll leave here with sort of a final comment for our audience. Anything that Hyosung Innovue is working on specifically right now that is intersecting with these trends, and anything that our audience can turn to or look to for resources, hardware, or even just kind of advice or a pulse check on where the industry's headed, by getting in touch with Hyosung Innovue.
Yeah, our website has a lot of information about that, as well as the contact feature to get in touch with us if you want to have a direct conversation about it too. I think, our company over the past few years has really kind of branched out into a lot of different types of technologies. But at our core, at our heart, we're still really kind of specialize and focus on the cash automation tools and continuing to push the envelope on those things. Yeah. So, taking ATMs from dispensers to dispense and deposit to recycling inside. Now, how do we continue to push that to make them even more self-sustaining, self-sufficient, to require less attention just to make sure they're up and operating, is some of the things that we're continuing to kind of push the needle on, as well as kind of expanding into other types of automation too, when we talk about point of sale automation. And I think one of our latest ones, we've got this robot that makes coffee, which is kind of cool too.
Ooh, fun.
So we're expanding in a lot of different places, but you can find out, especially in that core banking functionality. There's a lot of resources on our website as well. And as you mentioned at the beginning, we've got quite a few episodes of me babbling on for about 45 minutes on different topics too, that we can, if you're kind of captive in a car driving, you can kind of listen to it instead of read about it online. And again, you can always get in contact with us. We're happy to talk through anything.
Love it. There's plenty of Bill Buddy content out there, folks. So if you didn't get enough today, there is more. So Bill, thank you so much for your time. It's been really insightful getting your perspective on these evolutions. Again, your experience working all sides of the banking ecosystem, I think, give us a really accurate and actionable pulse on where the industry's at. So it's always a pleasure sitting down with you. Again, folks, we've been chatting with Bill Buddy, Vice President of Banking Strategy and Solutions at Hyosung Innovue, and I'm looking forward to the next one, getting you back in studio. So let's make it a little sooner next time. You know?
Maybe one of these times, maybe we'll just talk about our favorite movies.
Yeah,
instead.
exactly. Don't leave me waiting so long, Bill. All right. Bill, thank you again for your time. It's been
Thanks
great.
for having me.
Awesome.
Appreciate it.
And thank you everyone for joining us on another episode of Banking Experiences, a Hyosung Innovue podcast. If you like what you heard and saw today, make sure that you're subscribing on Apple Podcasts and Spotify. And of course, heading to our website, hyosunginnovue.com. Again, hyosunginnovue.com for not only other episodes of our various podcast series, but to find out more about how we are helping move forward the world of banking and more. So thank you so much for your time today, folks. We'll be back with another episode very soon. I'm your host, Daniel Litwin, the voice of B2B, and we'll catch you on the next one.